Traders are bracing for what could be a manic Monday on global oil markets as investors search for an end to the crisis in crude.
Whatever information comes out of Doha will have a significant impact on short-term oil prices. There's a lot of people that will trade the news coming out of this meeting.
Markets want proof that producers are serious about cutting the oversupply in crude that helped trigger last year's collapse in prices.
It could reinforce this idea that the worst of this oil crisis has already been priced in, so the path of least resistance is higher.
On the surface, not much will change if oil ministers agree to freeze production at current levels.
OPEC already has a freeze in that it's already producing at maximum capacity.
What is changing is a turn in the U.S. oil market. Output has been falling steadily this year. Fewer rigs are operating. And word on the street is banks are cutting billions in credit to the industry.
We think U.S. oil production is going to be 800,000 barrels lower by the end of the year than it was at the beginning of the year. So that's a pretty significant decline in U.S. production. So OPEC, if that's what they wanted to accomplish, they've accomplished that.
But it's hardly mission accomplished yet. Iran remains a sticking point. As Oil Minister Bijan Zanganeh told me 6 months ago, Iran will not freeze production after years of sanctions. That could scuttle a deal, but there could be some wiggle room.
The best case scenario for the bulls is that Iran comes to the table and says, okay, we will freeze production once we get to X level, whether that is 400,000 barrels higher than where they are now or 800,000 barrels, their ultimate target.
The plunge in prices has even caused a great deal of economic dislocation right here in the oil-rich Gulf states. So everyone attending the meeting in Doha would like to see oil move higher. And ministers are well aware if there is no agreement, it could scupper the recent partial rally. John Defterius, CNN Money, Abu Dhabi.